Welcome to Trading Lounge and the gold and silver report for the 15th of February. So there's not a lot, obviously the market's not trending at all. So let's have a look at a variety of counts, okay? So obviously this market is working, pulling back in a bullish corrective pattern. So at some point it's going to break to the upside. It's just a matter of when it does that and how it does that. But even if it follows this particular pattern here with the A, the B, the C, the D here, and then the E here, we're still going to get a breakout above here. So we'll need to work out where to go long at. But also want to have a look at, there's another count that's quite similar to this as well that I want to have a look at. And we also should have a look at a bearish count as well here, just in case this is still down for one and back for two here, down for one and back for two, and going down for wave three as well. It won't hurt to have a look at that. We'll also have a look at the intraday count as well on the tick chart. There's not a lot happening with the US dollar index at the moment, so I'll just bring this up here. It's just on an hourly chart here. What I can say though is that the move from this wave three here is an A and a B and a C wave. This is corrective, right? So at some point this low is going to be taken out here, and what relationship that has to the gold, we'll see. Now the move coming down through here as well, it's this box here is the 50-60% retracement level, and we can see three waves down here so far. I won't go in and pull them apart, but it is we can count it as an A wave, a B wave, or a C wave, or we can count it as 1 and 2 and 3 here, and up for 4 here. Let's see if we go down for wave 5. If we get 5 waves down there, then we can label it wave 1, and then we can look for a wave 2 pullback, and in that case then we're going to get another 5 waves down for wave 3, 4 and 5. Let's see if gold does the opposite. Okay, so let's see if gold pushes up from where it is here now. So anyway, the idea of following the dollar index here was simply to see firsthand what relationship it has to gold in terms of Elliott wave and the structures that we're working with. So we're just going to, continue to play with it for a while. We may ditch it, we may keep it. But it'd be nice to know the relationship and how it works, and is it any good? Can we use it? That sort of thing. So anyway, that's where that is. Not a lot of change. It's just something I mentioned last time we spoke as 1, 2 and 3 down here. We'll see if it's 4 and 5 or if it pushes up, and we'll see what relationship it has to the gold there. So coming back to the gold here, this triangle may or may not be right. So there is other patterns that can be played out here. It's going to be complicated. I don't think it's a matter of being right or wrong. I think what matters at the end of the day is finding trade setups and also figuring out the end of the structure, because it would be nice if, when it matures and it's close to the end, then, we'll be able to get it at that particular point. But yeah, in the meantime, I think we're still in for a bit of a guessing game of which count is correct. So anyway, let's just go in from the daily chart here into the 4-hour chart and just pick this little move up in here as a 4-hour chart. So yeah, so we're looking at wave C coming down through here. It's possible that Y is here. I don't think that's the case, but either way, we can look at this B wave up here, an A and a B and a C wave here for this, and then looking at this as an A wave, a B wave, and a C wave up here. So we do need to see this up in 5 waves. So if the US dollar index is going to push down, then we need to see this push up, don't we? That's what we're thinking. So we'll be looking at this here in 5 waves to the upside here. Let's just see how we go with this. Yeah, so anyway, that's the triangle pattern. Let's see how that plays out. Of course, in this case here, by the by, this is sitting at the 61.8% retracement level from this high to this high, the 61.8 here. So in this case, we don't want to see it going any lower, do we? We'd want to see it push up from there. So if it was going to push lower, then we would need to, well, be on the short side, really. But let's just go in and have a look at a couple of counts that are just alternative counts. Excuse me, just get things working a little bit here. So it's also possible this count here to have this as a B wave, an A and a B and a C wave finishing down here, and that would be an A wave to here, an A wave to here, then A, B, C here, and then 5 waves up here for wave C of B here and finish there. I mean, do we trade it up here? You know, that's the point. You know, would it just keep on going up from that point? That's possible. So I think finding a nice trade setup would be good. And even if we do catch that just the third wave here and get stopped out later, we'd have a small profit. I mean, I'm not going to do that myself personally, but this is just another count that we can look at here. And then there's also the bearish count as well. I don't think it's the case, but we need to look at it over here. So it's looking really at the top here being down for 1 here, an A and a B and a C here for wave 2 or B, and then down for 1 here, an A and a B and a C back here for 2, and then down for 1, and then an ABC back for 2 here. That will be the 50-60% retracement level, and then down for wave 3, 4 and 5 down through this way here. So that low there is going to be really important, but we should take a closer look at this little pattern in here and get a better understanding of that. So we're going to go to our tick chart, we're going to bring in more data, and this is what we've been working with here. So I think it's important, first of all, just to go back over this little count here, because this is the reason I don't think it's bearish, is because we can look at this as wave 1 here and 2 here, and then 1, 2, 3, 4, 5 for 1 and 2 and 3 and 4 and 5 here, a nice fourth wave here. When I say nice, it's ugly. And then wave 5 up here, and this wave 4 could also sit over here as well. Main point being that we haven't made a new high. So that really leaves it up here as wave A or wave 1 here. And then we need to look at this section here. So that's what we'll do now. So looking at this here, just good to go back over things. So this is nice and impulsive down through here, and then we could look at this as an A wave, a B wave, and a C wave over here with 1 and 2 and 3 and ABC for 4 and up for 5 here. So it does make a nice A, B and C here. And then looking at this here as wave 1 here and 2 here, and then 1 and 2 and 3 and 4 and 5. So that can just come across here somewhat. And then down here from wave 4, where we were last time, it did extend a bit further down than I thought it would have done, but still we've got our 1, 2, 3, 4 and 5 here. So we've got that in play there. So to me, this here would be corrective as an A and a B and a C wave to this point. Now I have to say this here does appear to be looks like a little bit corrective to me, just its nature here. It doesn't look like a nice 5-wave structure to this point, so that sort of raises alarm bells. So technically we can go short under this low here. We could probably even go short under this low here if you wanted to, if you're looking for that. It may not, or may or may not, but definitely under here, that's where you could go short. You could get a better position over here for that there as well. So this is not really shaping up here. I mean, I'd probably have to call it bullish. It just doesn't look that bullish, but I'd have to call it as 1 and 2 and 1 and 2 here, and then also 1 and 2 here. I can see how we can view it as an A, B, C here for the A wave, back for the B wave, and up for the C wave here. I can see that. But here it looks like it's down for 1, back for 2, 1, 2, 3, 4, and 5 here. So it does look a little bit bullish in that regard, but I have to say it's pretty ugly and messy. So I think we just stay with the bigger trend here. This does appear to be an impulse wave to the upside. This does appear to be a corrective wave to the downside. If I'm wrong, then we need to go short below here. The other side to this, though, is any move to the upside here on the bearish side would come in at the 50-60% retracement level, so in this space here for that. So that means technically we could look to go long above above this level here. But normally we would just go long on the 30 on the top of group 1 here. So we've got 1800, which is a minor level, and then we've got let me just clean this up a little bit. That's the important number there. 1800 minor level, and then we've got sub levels 1, 2, and 3 here. Getting support this time around on top of group 1 would send the market higher. But so what we would need to see here, well, we've already arrived here, we've got the reaction here, so we'd need the first high above the level, and then we'd need to see some sort of corrective pattern here. So once you've seen that, and then you can go to the second high, then you could go long at that point. Okay, but that's where you've got to be careful, because that's why you need that setup, because it could just come down from that point. So this little setup here, the classic trading levels pattern, really helps put a line in the sand, I guess, So yeah, look, based on this here, this is impulsive, this is corrective, we should be going up. If this low here gets taken out, then there's a problem. In terms of long trades, we really want to be on top of group 1 and on top of the 61.8% mark here. That will be that block. All of that's the supply there. That's just sellers, really, isn't it? So all of that's the real resistance there. So we'll cop the lower end of that. So getting that support pattern here for the upside is what we'd be looking at in terms of being bullish. So really that's it for gold, really. So there's a variety of patterns that can occur, and we've drilled into the intraday here. So based on the intraday, we should be sort of heading higher in this space. Now we could be heading higher in a variety of counts. That's the other little trick with all of this as well. So we need to take that on board. I don't see it's time for trend trading yet. Do you know what I mean? If you're addicted to this market, then okay, you can have a crack at it at 1830. If it doesn't mean that much to you, then let it go, and we'll pick it up, in a better, probably a higher price, but a better situation. Okay, let's have a look at silver. With the silver here, I won't go into the bigger picture. I'm just going to stay into this is 100 ticks here, and this is where we left off last time. We also were counting from the low here. We counted 5 waves up through here, and then we were looking for an A wave, a B wave, and a C wave back here for wave 2 into the 50-60% retracement level. We noted we had wave 1 here with an ABC pattern through here, so we're also looking to build in long trades here and here. So we are now long in this market. Well, I'm not personally, but just saying, and put the stop under here. So let's just see if that continues to climb to the upside. It's as simple as that. There will be the resistance, of course, and the resistance is right where it is now for this. So that's the 61.8%. So that's the problem area there. So what we could say is that once that becomes the support, then we're past any problems with that, and we'll be taking out that high here, and we'll be heading up to 2.8 at that point. So there is a little bit of a group 2 in this area up through here as well. So we've got that one there. And as I mentioned before, 72 is important, but when you get 772 or 272 together, they just seem to carry more weight. So just be mindful of that. I don't know the reason for that. It's just through observation, so I don't understand why. And then 265 here, so that will be, that's just little group 2 here. And then of course we've got the midpoint here, which will be the 50, 2750. And then in the lower end of the 2700 area here, we've got 2710, 2720, and then we've got the top of group 1 here, which will be the 30. So getting a tested support on top of the 30, that would set the target at the 50. So yeah, the market's currently battling it out here, on trying to get support on top of group 1 and also the 61.8% mark. So give it a little bit of time, and then we'll see how that plays out there. I won't be able to count this little bit in here. I mean, I could, but it's just got overlapping wave structures. So it's probably a building process going up into a third wave, a series of 1s and 2s in here. We'll just see how that plays out, but that's where it can fail from and move down at that point, and that's where the risk is. If you're not long in this market, then you can also look to go in on that high there as well for that. I also want to have a look at the Goldman Sachs commodity index, which is this one here. Now, just before I talk about that for a moment, the Goldman Sachs Commodity Index, they started it back in 91, and then they sold it over to the Standard & Poor's here, and they've been running it. The constituents in here only leaves gold at 5% or 4%, and these are the weightings over here for this. But I just felt that it's important because we're talking about gold, and it's a commodity, and I've just noticed this here. So this goes back to 2008 here, and this is an A wave, a B wave, a C wave, a D wave, and an E wave here. So this is an Elliott wave triangle for this commodity index, which triangles only occur in either B waves or wave 4s. So this is a large wave 4 here. So that means this commodity cycle will push all the way up into 2023. So I can see for copper and all those commodities that we're going to be bullish for the next 3 years. I think that's pretty damn exciting. So yeah, gold could sort of fit into that. But as this pushes up here further, that's obviously going to put a lot of pressure on all those short players in the gold and silver market. So they're going to have they're going to have a hard time for sure. So this is coming into the third. I won't go into this today, but coming into the third wave here, those shorts will have to be covered. Alrighty, I'll leave it at that. Thanks for tuning in. Much appreciated. Cheers.